I'm Glenn Freeman for Morningstar, and I'm joined today by Adrian Atkins, one of our senior equity analysts. Adrian, thanks for your time today.
No problem, Glenn.
Now, Adrian, we're talking about Contact Energy, a New Zealand-listed utility company. Why is this one of your preferred picks in the space, and what distinguishes it from some of its competitors?
All the New Zealand generators have a lot of renewable energy, and that's coming from hydroelectricity and geothermal, and we think they're really good quality renewable assets. In contrast, here in Australia, we mostly rely on coal and gas-fired power. We have a small amount of renewables, but that's mostly wind and solar, and they're not as good because it's intermittent supply. You're not getting the power when you want it, you're getting the power when the wind blows. So we think for that reason, New Zealand's actually really well placed. It's kind of future-proofed in that they already have very good quality renewable assets. Contact, like most of the utilities, is a good quality company. What differentiates it from the peers is that it's a lot cheaper. It generates very strong free cash flows, and it's got a big dividend yield with pretty decent longer-term earnings potential.
And Adrian, can you talk us through a bit about what Contact does and what is a gentailer?
Well, gentailer is just a term combining two words, generator and retailer. So these guys both produce electricity and sell that into wholesale markets, and then also a retail division which sells to your residential and business customers. So very similar to AGL in Australia.
And more broadly speaking, utility companies are generally regarded as defensive stocks and as dividend payers. Where does Contact fit within this context?
Yeah, that's exactly how we think about Contact. It's a pretty defensive kind of company, and it's got a big chunky dividend yield. We think it will pay a yield of about 6.5%, mostly franked, in fiscal 2019. So that's very attractive compared to what you're going to get in the bank and to most other companies. Utilities provide an essential service, so there's always going to be demand. And the good thing about these utilities is they're vertically integrated, so they both generate electricity and sell to retail customers. So they know what kind of price they're going to be generating in electricity for, and also what price they're going to get for selling it. And so that keeps their earnings fairly stable, though there can be a bit of volatility based on rainfall patterns, being that so much of the power they produce comes from hydroelectricity.
And Adrian, what are some of the potential business risks that Contact faces, which investors should be aware of?
There's a couple of risks, but we're not too concerned with them. The first is the Tiwai Point aluminium smelter. That's a major electricity user in New Zealand. It was considering closing a couple of years ago, and if it did close, then the industry would be oversupplied electricity, and that would keep the wholesale price low and reduce the ability to make profits. But we don't think that's going to close in the foreseeable future because the aluminium price has increased significantly, and the business has also stripped out some costs, so it should be making pretty good money at the moment. Another risk is regulation. Once again, though, we're not too concerned by that because regulation only really becomes an issue when companies are pushing up prices and making big profits, and that hasn't been the case in New Zealand recently.
And lastly, as a dual-listed company in Australia and New Zealand, are there any aspects that investors should be aware of?
Yeah, that's a good question. Unfortunately, the liquidity on the ASX is very low, so it makes it very difficult to buy and sell shares in Contact Energy on the ASX. I would actually recommend seeing if you can open an international account where you can buy shares on the NZX. I think CommSec and other major brokers do offer that service. Another thing to consider is the franking. So the dividends are imputed for NZ residents, but not for Australian residents, but you do get a small supplementary dividend, which is worth a few cents per year. So instead of getting a 6.5% yield in FY19, I think you'll probably get a 7% yield, but with no franking.
Thanks very much for your time today, Adrian.
No problem, Glenn.
I'm Glenn Freeman for Morningstar, and thanks for watching.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.